Now let's study the next chart in the consideration, which is mountain and baseline chart. I'm not a big fan again of mountain and baseline chart, because mountain and baseline chart again is just a elder brother of line charts actually. So if you look at it properly, you will see that it's nothing but the closing prices joined for various time frames. Okay, so if you see here, 1 hour time frame is there. Now if it is a 1 hour time frame, so definitely we can have a higher time horizon here. So it's basically a higher time horizon. If you see how much time horizon we have covered, so it's approximately it's kind of 3 months which we have covered here. Okay, now in 3 months, 1 hour, so in one session we have around 6 hours. So 20 sessions in each month would mean around 120 candles or 120 points, and 3 months would mean around 350-60 points, because these are not candles and just dots. You have connected all the dots, right? So it becomes more easier to fit in more time horizon in a line chart compared to a candlestick chart. So this is a 1 hour Nifty chart. Now what is this? This is called the baseline. Okay, that's the baseline. Now who will decide what is the baseline? We will decide. So we can put our baseline wherever we want. We can put our baseline at the cost price also. Suppose you have bought a stock at 20 rupees. So you can put a baseline at 20 rupees, so that whenever the stock went above 20, you will know it will be shown as green. And whenever the stock went below the baseline, it will be shown as underwater. If you see, it looks like a mountain and this looks like underwater shadow. That's why it's called a mountain and baseline chart. Okay, this baseline can also be a benchmark. Suppose you think that, let's say, 10,000 level of Nifty is a benchmark, okay, or 11,000 Nifty is a benchmark. So you can upgrade and put your baseline here, so that you'll know whenever Nifty goes above the benchmark or the baseline. Whenever it goes above, it will be green in color. This could also be the average price. Suppose you had bought a stock at different prices, so you can put the baseline as the average price. What you are going to decide as the baseline, that's your call. Okay. Now you will ask me, sir, is this chart useful? I'll say absolutely not, because in most of the cases, these charts are used by portfolio managers to understand the drawdown. The drawdown is basically that at what point of time there was a maximum loss in the charts. So this is called the drawdown. So suppose if I know that right now we are into profits, right? Can you see the mountains peaking up here? Yes. But there was a time we were into losses. So if I want to know that what was the point where there was the maximum loss, if I want to know that, what was the point of maximum loss? So I think this is the maximum drawdown, isn't it? So if this was your cost price, at one point of time, you were down up till here. That's the maximum loss you had suffered. While right now, obviously, you are in tremendous profit. If this was your baseline and it was your cost price, then this is the maximum drawdown. This is called the drawdown. This is what a mountain and baseline chart means. So mountain baseline chart is also done.